Question 23. Jamie Jackson runs a small business as in the process of preparing this year's balance sheet. During the year, Jamie's office experienced water damage and all of his financial records were destroyed. In order to complete this year's balance sheet then, Jamie has decided to estimate the value of some of the balance sheet's items in today's current values. Which qualitative characteristic has been breached in this situation? Is it A, historical cost, B, reliability, C, relevance, or D, comparability? The one we can get rid of straight away is A, historical cost, because that is an accounting principle, not a qualitative characteristic. Let's look at the remaining three and let's look at the definitions. So what Jamie's done is he's lost all his documents in a flooding incident, so he has no more documents. So what he's done is decided to guess some of the numbers based on his past experience. Is that going to breach reliability? Reliability says information must be free of opinions and estimates and verified with the source document. Clearly, that is going to be breached in this case. What about relevance? Is it going to influence the decision making of the business by including these guesses? And comparability, is the information comparable over time and has he used the same accounting methods? So let's look at the first one, which is reliability. He has breached that by making these guesses. He's going to make some guesses of some items because all his documents are gone, so he can't verify anything with the source document. And these are going to be based on his personal opinion, so that has been breached. Could you argue relevance has been breached though? I'd argue not, and that's because he does need to still do a balance sheet. You just don't get to not do one because you had a flood and the shop was flooded and all your documents got ruined. You still need to prepare one. So you really do need to do one to make future decisions. So that is actually not being breached here. What about comparability? Has he breached comparability over time by using the same accounting methods or not? Well, we don't really know. We don't have enough information to really answer that question. Obviously, this isn't what he would probably do every year, but at least by producing a balance sheet, even though it's got some numbers that are estimates, he still can compare his balance sheet this year with last year and the year before. So I'd argue that that is not being breached here. In fact, him making a balance sheet full of estimates will help him compare his results over time. So the only qualitative characteristic here which has really been breached is reliability. Based on our four options, we're down to B, C, and D. So we're going to get rid of options C and D and say the qualitative characteristic that has been breached in this situation is option B, reliability.